Good evening. We are glad to have another day this far, and we thank God. 2 days ago, we were talking about uh, what is currently taking place at the Nairobi Stock Exchange, the NSE, and it is just 3 days ago when actually the Kenya Re share was trading at 3 shillings and 25 cents. When if you Google today on 12 May 2026, if you Googled the Kenya Re share price today, you'll definitely find out that it is trading at 3 shillings and 50 cents. So, what is the main reason behind this sudden rise? That is what we are going to learn today, and I'm going to emphasize about one very essential aspect in stock trading that we must know, and this is the ex-dividend date. By definition, this is the date that is set before which, if you had a share with a certain company, you'll definitely receive the dividends, and this dividend will be paid to you in the most appropriate time. When I refer to the Kenya Re share, today it has been trading at 3 shillings and 50 cents, and these dramatic rises are as a result of the fact that those people who are very conversant with this trading, they already know the company has already announced the dividend, whereby each share is going to be paid at 0.15 shillings per share. So we also elaborated in the previous lessons that for you to earn a substantial amount, which normally come yearly from these dividends, you must have as many shares as possible. If, for example, somebody has 100,000 shares, and you wanted to know how much this person is supposed to get, you just take the number of shares, you multiply by the dividend paid per share. In this case, somebody having 100,000 shares with Kenya Re will be paid 15,000 Kenya shillings, whereby there shall be only one deduction, and this deduction is the KRA tax. That is not usually 5% of the total money that you are supposed to receive from the dividends. So the share has been rising dramatically because people are buying shares in large volume so that they have those shares before the ex-dividend date expires. And what is very funny with the shares, these people are buying very heavily until at around 21st of June, because already we know that the company has already listed its ex-dividend date as the 22nd of June. So what normally happens, once you have bought those shares and you have the shares within that date, you'll automatically earn a dividend. It doesn't matter when after that you are going to sell your shares. Even if it is after 1 day, you will still get that dividend. And that is the importance of understanding how these stocks works, so that you just pursue the dividend, and after that you sell your share as fast as you can, so that you can use that money elsewhere. Because normally what happens after the ex-dividend date passes, then the shareholders start selling the shares, and by so doing the share price dramatically falls. So it is also good to note that as much as we pursue the dividend, when you have a few number of shares, it is always advisable to sell those shares before that ex-dividend day, so that you can earn more than waiting for a meager dividend that you are supposed to reap, because you have a few shares. So that is what I was trying to sensitize ourselves today, so that we continue learning about these stocks and stock markets for our own good. There is something else that I wanted to give, and I tried to quote somebody. If somebody had 100,000 shares, you'll be waiting for 15,000 Kenya shillings minus 5% the KRA tax. Thanks a lot. That is the little that we had to learn today. Next time, God willing, we shall venture into another area. Once again, thanks a lot. And we are continuing to request you, once you get this information, so that we can continue learning together, and so that we can continue investing while we are sitting down and doing other business when still our money is earning us something. Subscribe so that we continue learning together. Thanks a lot.